Hey everyone, I'm back with some breaking news that's going to put real money back in your pocket. If you're collecting Social Security benefits, President Trump's one big, beautiful bill just passed the Senate. And I've got the numbers that show exactly how much more you could keep each month. Now, I know there's been a lot of confusion about this, so let me set the record straight right away. During his campaign, President Trump promised to completely eliminate taxes on Social Security benefits. The one big, beautiful bill that just squeaked through the Senate doesn't go that far, but here's what it actually does. And trust me, it's still really good news for millions of us. The Senate version of this bill would help 33.9 million seniors with an average increase in after tax income of $670 per person. That's not pocket change when you're living on a fixed income. And here's the kicker. 88% of seniors on Social Security would pay no taxes on their benefits under this new bill, compared to only 64% under current law. Let me break down what this means in real dollars. Right now, if you're single and over 65, you can deduct $15,000 as your standard deduction, plus another $2,000 because you're a senior. Under the Senate bill, you'd get an additional $6,000 deduction on top of that, bringing your total to $23,750. For married couples filing jointly, you're looking at $46,700 in total deductions. The economy has been tough on all of us, especially those trying to stretch every dollar. When you're dealing with higher grocery prices and wondering if your next Social Security check will cover everything, any relief helps. This bill targets seniors with modest incomes, single filers making up to $75,000 and married couples making up to $150,000 get the full benefit. Now, I want to be crystal clear about something important. There's no new $1,400 stimulus check coming with this bill. I've seen those rumors floating around social media, and I need to tell you straight up, Congress hasn't authorized any new direct payments. The relief in this bill comes through tax deductions, not stimulus checks. The bill passed the House by just one vote back in May, and it barely made it through the Senate on July 1st. Now it goes back to the House, where lawmakers can either approve it as is or make changes that would require another Senate vote. The political reality is that every vote counts in this economy, and both parties are feeling pressure to deliver results for seniors. I've been covering Social Security and taxes for years, and I hear from so many of you about the same struggles. Just last week, I got an email from Margaret in Ohio who told me she's been paying taxes on her Social Security benefits for the first time this year. She said it felt like getting punched twice, once by inflation at the grocery store and again by the IRS when tax season rolled around. That's exactly what this one big beautiful bill is trying to address. When you're living on Social Security, every dollar matters. Think about it this way. If your grocery bag keeps getting lighter, even though you're spending the same amount of money, any extra cash you can keep in your pocket helps fill that bag back up. That's what we're talking about here with these new deductions. The numbers tell the story of our economy right now. While the Federal Reserve has been working to bring inflation down, seniors on fixed incomes are still feeling the squeeze. The average Social Security benefit is about $1,900 a month, and when you're paying taxes on top of that, it really adds up over the year. Here's where the politics get interesting, and I promise to keep this neutral. Right now, Republicans control both the House and Senate by very narrow margins. The House passed this bill by literally one vote. That's how close these things are. The Senate managed to get it through, but just barely. This isn't about whether you're Republican or Democrat, it's about whether lawmakers can deliver relief to seniors who need it. What's really encouraging is that this bill targets the right people. The $6,000 deduction phases out for higher earners, so it's not just another tax break for wealthy retirees. It's designed to help people who are truly stretched thin in this economy. When 14.2 million seniors who currently owe taxes on Social Security would be completely exempted under this bill, that's significant relief. The political reality is that Social Security is the third rail of American politics. Touch it and you get shocked. That's why this bill uses deductions instead of changing Social Security directly. Budget reconciliation rules don't allow direct changes to Social Security benefits, but they do allow tax changes that can provide similar relief. I want to take a quick moment here to ask you to hit that like button if this information is helpful. I know it's easy to forget, but it really helps me continue bringing you these updates on policies that affect your daily life. The algorithm rewards channels that get engagement, and your like tells me you want more content like this. The stimulus discussion keeps coming up in my comments. And I understand why. We've been through several rounds of direct payments, and people are wondering if more help is coming. The reality is that this one big, beautiful bill is the relief package moving through Congress right now, and it focuses on tax relief rather than direct payments. Let me dive into the numbers that really matter for your household budget. The White House analysis shows that this Senate bill would provide an average of $670 more in after tax income per person. Now, $670 might not sound like life changing money, but when you break it down, that's about $56 extra each month you get to keep instead of sending to the IRS. Here's another key statistic that shows how this economy has been hitting seniors. Currently, 36% of Social Security recipients pay taxes on their benefits. That's about 24 million people. Under the Senate bill, that number drops to just 12%, meaning 88% of seniors would pay zero taxes on their Social Security. That's a massive shift that puts money back where it belongs, in your pocket. The Congressional Budget Office estimates that the total cost of these senior deductions would be about $18 billion over the next 10 years. Now, $18 billion sounds like a lot, but in the context of federal spending, it's actually a targeted approach. Compare that to completely eliminating Social Security taxes, which would cost about $36 billion and potentially hurt the Social Security Trust Fund. Let me explain why the trust fund issue matters in plain English. Social Security taxes help fund the program itself. When you pay taxes on your benefits, that money goes back into the system to help pay future benefits. Completely eliminating those taxes would mean less money flowing into Social Security, which could push up the timeline for potential benefit cuts by about 2 years. The current law on Social Security taxation hasn't changed since 1993. Back then, the thresholds were set at $25,000 for single filers and $32,000 for married couples. Those numbers haven't been adjusted for inflation in over 30 years. If they had been, the threshold today would be closer to $50,000 for singles. That's part of why so many more seniors are paying taxes on benefits now than Congress originally intended. Here's where the economy and your questions intersect. I keep getting asked whether Social Security benefits will keep up with the cost of living. The 2024 cost of living adjustment was 3.2%, which helped, but many of you are still feeling the pinch. This tax relief is designed to work alongside COLA increases, not replace them. The Federal Reserve's interest rate decisions also play a role here. Higher interest rates have helped bring inflation down from over 9% to around 3%, but they've also made it harder for people to refinance mortgages or get affordable credit. For seniors on fixed incomes, lower inflation is good news, but the damage from the previous high inflation is still being felt every time you shop for groceries or pay utilities. One more important number, the phase out thresholds. The full $6,000 deduction is available to single filers with income up to $75,000 and married couples filing jointly with income up to $150,000. These thresholds recognize that many seniors have income beyond Social Security, maybe a small pension, some investment income, or part-time work, but they're not wealthy by any stretch. Now, let me tell you why understanding these economic cycles matters so much for your financial planning. We've been through boom and bust periods before, and seniors often get caught in the middle. Think of your purchasing power like a shopping cart. During inflationary periods, you can afford to put less in that cart, even though you're spending the same amount of money. This tax relief helps fill that cart back up, even if it's not completely full. Here's what you need to watch for in the coming weeks and months. The House needs to vote on this Senate version of the One Big Beautiful Bill. They can either pass it as is, which would send it to President Trump's desk, or they can make changes that would require another Senate vote. Given how narrow the margins were in both chambers, any changes create risk that the bill might not pass. The next major Social Security date to watch is the 2026 cost of living adjustment announcement, which typically comes in October 2025. Early projections suggest it could be in the 2.5% to 3% range, but that depends on inflation data we haven't seen yet. If this tax bill passes, the combination of COLA increases and tax relief could provide meaningful improvement to your monthly budget. The Federal Reserve has two more meetings scheduled before the end of summer, and their decisions on interest rates will continue to influence the broader economy. Lower rates could help boost economic growth, but they might also contribute to inflation. It's a delicate balance that affects everything from your savings account interest to the cost of goods and services. I also want you to keep an eye on the Social Security Trustee's annual report, expected later this year. This will give us updated projections on the trust fund's financial health and whether the timeline for potential benefit cuts has changed. The good news is that any benefit cuts would only affect future benefits, not current ones, but it's still important information for your long term planning. One final thing to watch: there's been discussion about additional legislation to address the so called tax torpedo that affects some seniors. This happens when Social Security benefits push you into a higher tax bracket, creating an effective tax rate that's higher than what wealthy people pay. While this current bill helps many seniors avoid taxes on Social Security entirely, future legislation might address this issue for higher income retirees. Before I wrap up, I want to thank everyone who's been liking, sharing, and commenting on these videos. Your engagement helps me continue bringing you the latest updates on policies that affect your daily life. If you haven't already, please hit that subscribe button and ring the notification bell so you don't miss any important updates. I've also put together a playlist of Social Security and tax videos that covers topics like when to claim benefits, how to minimize taxes in retirement, and what to expect from future COLA increases. You can find that playlist in the description below. Remember, I'm here to provide information, not personal financial advice. Everyone's situation is different, and you should consult with a qualified professional about your specific circumstances. But knowledge is power, and the more you understand about these policies, the better decisions you can make for your financial future. Thanks for watching, and I'll see you in the next video with more updates on the policies that matter most to your retirement security.